Welcome back to our second discussion of the day. This one's focused on the future of finance, transforming finance, fintech disruptions in the region. Now, amid shifts in consumer patterns and sources of growth, fintech is rapidly evolving in the greater China region. Disruptions in financial transformations are occurring in a variety of areas, including wealth management, credit services, digital payments, insurance, and crowdfunding. The region is pushing blockchain technology to the forefront of its efforts to streamline financial services. And last year, China began piloting the world's first digital sovereign currency. To address the future of financial services in the region and the ongoing transformation of fintech, I'd like to introduce you to the moderator of our second session, Kar-Yan Tam, Chair Professor of Information Systems, Business Statistics, and Operations Management, and Dean of the School of Business and Management at Hong Kong University of Science and Technology, which is an important partner of UCLA's. Dean Tam is the chairperson of the Curriculum Development Council of the Education Bureau and serves on the Exchange Fund Advisory Committee of the Hong Kong Monetary Authority. In this session, our panelists, who Dean Tam will introduce in a minute, will examine the convergence that could reshape the role of financial service players, create new ventures and partnerships, and ultimately drive new opportunities for growth in the region. For the second session, again, we will have time for audience questions. You can pose your questions via the Slido tool, which is embedded in the bottom of your screen. You can enter in your own question, or you can upvote one of the existing ones. Thank you very much, and let me now welcome Dean Tam.
Thank you, Professor Kramer. Greetings from Hong Kong. Good evening. Thank you for being here with us today. I would like to welcome those of you who have been with us for a long time now, as well as those who are new to the Wilbur K. Wu Greater China Business Conference. So welcome all of you. I'd like to start with some important background information, the key topics and issues for our discussion tonight, and followed by a formal introduction of our respectful guest speakers this evening. As you must have noticed in recent years, a technology-driven revolution is transforming the global financial industry. Financial products and services are rapidly transforming as a result of fintech. And we observe a new generations of fintech unicorns have emerged. According to different sources of estimate, there are over 100 fintech unicorns worldwide as of today. The growing applications of blockchain technology also changed dramatically the financial industry's landscape. If you just look at Bitcoin, which is one of the most prevalent blockchain-based digital currencies, it has increased its value by more than 900% just last year. As the global financial industry continues to transform, China's response is worth noticing. Last year, as mentioned by Professor Kramer, China issued the world's first central bank digital currency, CBDC, at the end of 2021. It had already 261 million users. On the corporate side, internet giants developing their own fintech companies, such as Ant Group and WeBank, and together they have amazed hundreds of millions in valuations. While there's a lot of innovation and energy in the fintech space, its rapid development also brings about considerable uncertainty. In China, we observe increased regulation of the fintech industry. As technology stimulates the fast growth in the finance sector, the question is, will it attract attention from the policymaker and regulator? What is the interplay between innovation, industry structure, and policy in the fintech space? In our discussion tonight, we will dive deep into the current landscape of China's fintech industry, as well as the future interactions between fintech companies and the regulatory system. With that, I would like to introduce our three remarkable guests tonight, Mr. Michael Sung, Mr. Jason Tao, and Mr. Robin Wong. Mr. Sung is the chairman of Carbon Brew Innovation, a venture building company focused on fintech, blockchain, and digital finance innovation. He is also a founder of Fudan Fanghai Fintech Research Center, and he is also a faculty member at the Chinese Institute of Economics and Finance. Our second speaker is Mr. Jason Tao. He is the CEO of Meotech. The company is an artificial intelligence platform that empowers financial institutions to draw actionable insights from analyzing their data. He is also a member of the Hong Kong Green Finance Association and is a director of the Alliance of Carbon Emissions Trading in China. Last but not least, Mr. Robin Wong is the CEO of Mokasa. This is a tech firm providing buy now, pay later services. He also founded Blackfish Group, which is an online credit card management business. On behalf of our host and audience, I would like to once again welcome our three very distinguished speakers to our session today. So let me start with Michael. I have prepared some questions for our panelists. Let's start with Michael. Michael, you have a lot of experience working with startups in mainland, in Taiwan, Hong Kong. As many can realize, the fintech ecosystems in China provides a huge source of talent and creativity. And many countries actually take reference of China in developing their own fintech industry. So I want to ask you, what is your view on the interplay between policymakers, regulators, state-owned financial institutions, and startup in China's fintech ecosystem that contribute to its success?
Yeah, I think, thank you very much, Dean Tam. I think this is, China has a very unique advantage because of the way the government is run and this very interplay. I actually am a serial entrepreneur, and over the years, I've had a solar company when solar was something that took over the world, and China took an amazing lead in that. Then in LED technology, and now in robotics and AI, and I believe fintech and digital finance, right? So in each of these cases, I think there's a number of points, right? One, because of the state planning of the Chinese economy. Okay, they are done in these things called 5-year plans, right? And it's actually not just one 5-year plan. They've already planned 15, 20 years ahead to the centennial of the Communist Party. So really, it's like we're talking decades-long strategic planning. And China is very unique because not only is it the producer of a lot of innovation, things like that, but it as its own enclosed economy, okay, can with 1.4 billion people can sustain a big portion of the demand. Okay, so they have everything in house from the supply side and the demand side, so they can basically kickstart any industry and take a leadership position in that very fast. Now we see China going through a unique period of time where in the beginning, in the 80s and 90s, it was the economic opening up, going from a completely communist system to an interesting form of capitalism, right? But then in the 90s, it's about industrialization. In the 2000s or so, it's about technology upgrading. And now we see the next phase of development, which will be the revamping of the financial ecosystem, to opening up of the capital markets, and to adopt things like fintech. And so this becomes a major priority for China. And you see, therefore, the strategic planning, the sheer amount of resources, and getting 1.4 billion people to move in one direction all at once is quite phenomenal. So from the underlying technology, okay, you mentioned blockchain. You can think of blockchain as the next generation internet technology that will allow the trusted sharing of digital assets. Okay, so Xi Jinping's on stage announcing that this is a national priority. It's become the infrastructure of infrastructures by which all these IT systems can connect to and do information sharing, which is important for things like big data and AI techniques to sit on top. From the infrastructure all the way to the digital finance layer, China's wholesale experimenting on what we call digital assets or digital securities. The CSRC, the SEC equivalent, is already putting all of future stocks and bonds digitized on blockchain. That's very coordinated with the government and things like that. And soon, as you mentioned, there's the recent further deployment of the ECNY, the digital currency. I think they have a full stack capability to direct the government and the whole industry and society to do massive adoption. And for this reason, I believe that China will be the one to watch in the future for the digitization of finance. Really innovation to take hold, right? We have Singapore, you have Hong Kong, you have Switzerland, you have areas where they have taken a first mover, right? Switzerland, in my opinion, right now is leading the world in terms of regulated digital assets and things like that. But Switzerland and Singapore is a tiny economy, right? Whereas China is arguably the largest economy in the world by PPP now. So I think when China wants to do it, and also China as the trade partner to most of the rest of the world, in fact, when they push their agenda to want to really spread these digital assets, I think it's going to really move the needle. And just a final point is, recently in China, you might seem to think that they're a little bit backward because they've banned Bitcoin. They've stamped out ICOs. Chinese people can't even get on exchanges to do these things. It's very true, but we have to make a very clear distinction between unregulated crypto, things like Bitcoin and things like that, which is, for sure they've clamped down, but the regulated stuff, okay, is really heavily supported. So what China's doing is basically cleaning house. They're trying to get rid of the unregulated stuff, which they think is systemic risk and that kind of thing, and uncontrollable. And now they're going to put in their own infrastructure, starting first with the digital RMB, right, the ECNY. But then when that gets in place, then all that digital finance innovation, from digital securities to digitized commodities to digitized real estate and stuff like that, massive experimentation across the board now.
Okay. So thank you. Michael, you mentioned a number of factors, including long-term planning, and also a very large economy that can sustain itself. So just a follow-up question on this. Do you think these factors are unique to China, or other countries with a much smaller scale can actually make reference to and learn from them?
Yeah, obviously, as I mentioned, China is unique because of that the scale and the coordination, I think, is quite unique. So there are elements I feel that China has a unique advantage. However, I think it boils down to one thing, which is regulatory sophistication. Okay, if you under-regulate, then you get a bunch of pirates and crypto scams and Ponzi schemes, and it kind of destroys the whole ecosystem and the credibility of the market, right? If you over-regulate, then you put a huge burden on the startups, and you basically kill things before they get started, right? So there is a enlightened sort of band in between, right, where you want to foster but you need to control it and things like that. So I think that ends up being the concept of a proper regulatory sandbox, okay, where you allow experimentations, but you're monitoring. Like the whole point of a sandbox is the kids can play freely and not worried about going to jail or getting in trouble, but you got a parent the regulators looking in and making sure that you're not really doing anything bad, right? And then as the kids play, then you understand what the learnings are, that the dynamics, the business models, what the risks are. And then so the government can evolve, I would say, enlightened policy to follow up on what is actually happening in the market. So you have market driven feedback, and you can you move the regulation in a positive way. So I think places like Singapore, as I mentioned, have done that very well. Hong Kong also has done that very well, although recently I think there has been a little bit more restriction. So you see a move of some of the fintech industry out of Hong Kong into other places because of this regulatory tightening. But that balance is very important. The US, for example, is notorious for not setting regulation and being quite onerous about it. So everybody's up in the air and not sure what they want to do, and then they move, right? So I would say for other areas, really what to watch is to find that balance, to have a supportive environment for startups to create an ecosystem, because that's really, in my opinion, digital finance disruption is one of the very next things, because we're talking about the digitization of anything of value, right? As the original internet was the digitization of information. So now we have another digitization of everything of value. This is massively transformative. There's no industry that's not going to benefit from the same way that internet benefited all industries, right? So I feel like this is something that most countries need to really focus on, and there's an opportunity to leapfrog. And in fact, smaller countries, right, or smaller territories who are more fleet of foot, who probably have more pain points, places like Africa or Southeast Asia, they have the most pain points to want to leapfrog into the new digital world, more so than, say, the United States, which already has a credit card infrastructure. So they already have payment solutions. They already have things that make their life easy. They're going to be a little bit slower to adopt it. Whereas in Africa, if you can't get access to banking system or US dollar or things like this, they're going to try to jump to new things that will help support your business.
Oh, thank you. Okay, Michael. So let me turn to Jason. Jason, you have been working with many financial and technology companies in the US and China. So my question is about innovations in the two countries. So both US and China lead the world in innovation at scale, but the two systems are very different. So what could the US learn from China and vice versa regarding innovation philosophy and approaches?
Thanks, Dean Tam. This is a very good question. And I think Michael has already shared an overall landscape of different economies in the US and China and Hong Kong and elsewhere. I think from my perspective, I have first of all, I have studied, lived and worked in US, the mainland side of China and Hong Kong and Europe for over the past 20 years. Let me just make an overall remark that I think each part of the world or each part of the overall geography has its own advantages and disadvantages, and yet there are still lots of things that Chinese entrepreneurs can learn from the U.S. and from, for example, from the Silicon Valley. Having said that, I do think there are two things that are very, to me, that are very different when I built companies in China compared to when I worked for startups in the U.S. The first thing is the focus on execution rather than the grand vision. It's really a two-edged sword. As you know, a few days ago, I was actually working with my marketing colleagues to further craft Meotech's grand vision because we haven't done it well, but we have executed it well. We have grown the team tremendously. We've developed our technology and we've generated revenue. And this is true to many Chinese startups, especially in the fintech industry, where the entrepreneurs would focus more on getting things done rather than carefully thinking about, for example, what is the grand vision, mission statement, and value propositions of the company. But then, as everyone can see, the larger startups or larger tech giants, they have a very clear purpose, the mission, and vision. It's usually along the way of companies' development that the Chinese companies are trying to firm up their value proposition. So this is a very big difference I've found out. Between the U.S., especially based on my experience in Silicon Valley and then in mainland China. And the other aspect is in particular to finance. I think Michael also mentioned about proper regulatory sandbox and regulation, the difference of regulation in China and in the U.S. I would say this is also especially important to finance and to fintech, Now, as a company who is in the fintech industry or / we're also in the sustainability technology, which is a very fast growing and unregulated at some point, a fast growing trend, but it's initially unregulated. I think regulation is also very important. The difference between, I would say, innovations in the US and in China is that I think in China, finance and fintech innovations are more focused on the real economy, whereas I think US, there's a slight kind of heavier focus on the capital market liquidity. What do I mean by that? I think many of the audience and including the panelists have noticed that the regulation that came out, the clampdown on and financials IPO, and despite all the discussion about how the regulations or it was done in the market, which I don't quite agree, but I have to agree on the overheating of the finance industry, and I have to agree on, for example, why the original purpose of some of these regulatory moves. I think China puts a very heavy emphasis on how finance and fintech altogether is serving the real economy, rather than whether it actually boosts up the capital market or further if there could potentially be a financial bubble. So I think that's something we as entrepreneurs who are serving financial institutions and who are building new things in the fintech industry should always keep in mind in mainland China, whether there's any deviation from serving the general public, whether there's any deviation from our overall purpose, going back to what I said initially, the overall value proposition of the company to bring real value to, for example, corporates or individuals in the real economy. So that's just my 2 cents.
Thank you, Jason. Well, I have a similar question for Robin, but focus more on comparing the fintech industry of the US and China. You probably heard about this view that the fintech adoption in the US has been slow compared to China, despite US is among the most, if not the most innovative countries in the world. So, Robin, what do you think are the reasons for this gap, the adoption of fintech in both countries?
Thank you, Dinta. I think first of all, I think the development of fintech in the United States is not slow. It is, I think North America is still a hub for breakthrough fintech innovations. So we can see that many powerful companies are developing rapidly, like Stripe, Plaid, Phone, and so on. Although in China mainland, you see also many faster growth fintech companies, but I think United States, I think the people do the same. So this is very important because I think what my opinion is that we are in actually different ways that. Due to 2 actually underlying reasons. The first one is about the legacy, So actually, the first one is about legacy. For example, like you see I think the most successful case in China of fintech is digital payment, right? So the QR code right now in Shanghai, in every cities, or even in the rural areas, you can use the QR code scanner to make payments in the merchants, and in United States it is not so popular because I think that's only because the credit card system and well developed in United States. And the United States, I think most of if you go back to 10 years ago, in China there's very few people. Only the top level people in big cities they have credit cards, but in the United States. more than half of the population holds even multiple credit cards. And even the companies like Capital One, they have issued credit cards for the subprime group of population. So in China, it is very easy to deploy a new payment system like QR code payment, right? But in the United States, people need to change their user behavior, and the bank system need to adopt a new technology. It is very costly and it's not easy. It takes a very long time. So the legacy, the similar systems are existing everywhere in the financial ecosystem in the United States. So that is the main reason. And the second reason, I think, is about regulation. I think Michael and Jason have also mentioned this part. I think the 10 years, in the past 10 years, we see the rapid growth of the fintech industry in China. The main reason is because at the very beginning, 10 years back, the regulatory framework in China was not completed. So you see that many companies like P2P companies everywhere in China, I believe more than 10,000 P2P companies in China mainland. Although many of them get some kind of consequence after year 2015, but we also see many startups become large companies, become giants today, and some of them went to listed in public. So this is another reason about innovations in China. You have a regulatory environment which is not very strict. But if United States, if you want to do anything new, you need to hire a lot of lawyers. It is a huge burden for startups, So you need to handle a lot of various compliance matters. So relatively speaking, it is difficult for any new system to emerge. You can have some, we call it micro innovations. If you look at the successful companies in the United States, Stripe, Plate, they are trying to link or repair the existing systems. They are not something is fundamentally different, But in China, if you look at the Alipay and some other products like Yuebao and Huabei, I like the product of Huabei because we are right now. My team is replicating that in Southeast Asia. Huabei is a product actually it's killing credit card. You see, in China, younger age, more than 60 of them. They don't even apply for a credit card. They are using Huabei only. So I think this is a huge change, a systematic change, and this cannot be happening in the United States. Only because it's regulation is different. But now I think the landscape is changing, and the regulatory framework in China is growing. It's getting more and more completed and complicated. So I think the environment in United States today is almost the state of China tomorrow. I'm a little bit sad about startups in China about fintech. Okay, thank you.
Thank you, Robin. Okay, so let me come back to Michael. Hopefully, I can ask one more round of questions from each of you. So, Michael, you mentioned earlier on about CBDC. And China is the only large economy in the world today that has launched its digital currency, and is now pilot testing in a number of cities in the country. So, do you see a government-led CBDC will crowd out market-driven payment solutions such as Alipay and Tencent Pay in China? Okay? And why, if this is going to happen?
Yeah, so in China, basically society has already been largely digitized, okay? 96% of the digital payments in China is controlled by a duopoly. Basically, Alipay and WeChat Pay, as you mentioned. These guys have each between them almost actually each one of them have almost 1 billion or over 1 billion users. So we have actually full coverage over most of Chinese society. That's really hard to replace. Okay, and I think the intent of the CBDC, what we call the ECNY now, is not really to replace, but to complement, right, and provide a more resilience in the financial infrastructure for the country, right? Having 96% of your digital payments infrastructure, by which all of most retail and payments are done by private companies, is probably not so comfortable for any government, right? That the equivalent would be saying like all payments in the United States have to run through Facebook, right? It's probably not something that they can control as much, and they would probably want to see more competition. They want to see more optionality to provide resilience in the ecosystem, and so that's what a main goal of the ECNY is. Okay, so right now, for example, China has 4 policy banks, right? The Bank of China, Agriculture Bank, ICBC, Construction Bank, right? And all these huge policy banks have no play in the digital payments ecosystem in the world, because the tech companies have had a first mover advantage. They have the data, and therefore they dominate the landscape, right? So, but with ECNY now, if you go to a merchant shop, okay, up until recently you saw 2 QR codes, right? You saw Alipay QR code and WeChat Pay QR code. No other optionality, right? But now there's going to be a third one. It's going to be an ECNY QR code, and any policy bank or any third-party fintech can now use that. And so what that means is that not only do the policy banks have a seat at the table, okay, they can issue their own wallets and financial services, but now any third-party fintech as well. And so that's going to create a whole explosion of innovation by smaller players, and fill out a much more robust ecosystem for the country. And then also, I will note that as you know, like most money, okay, already is digitized form. Right? We're not carrying trash bags full of cash to buy things anymore. You have bank accounts, and things like that. And those are digital forms of money already. Okay, but what the new technology does is to be able to provide a fiat-based version that can go into a retail setting. That's actually the main focus of the ECNY. It's not less what we call wholesale bank-to-bank transfers, which is more like SWIFT type transfers, but more like end customer. I can now zap from wallet to wallet, my e-commerce or whatever, and that's innovation is it's largely with the Chinese government, the PBOC, the People's Bank of China, is what the ECNY is focused on, right? So what's really going to happen, I believe, the question is not if it's going to replace, but it's going to basically, my thesis is that ECNY is going to just fall into the ecosystem. Alipay, WeChat Pay, and now a bunch of banks and other third-party fintechs will be the last mile to connect to different customers and provide the innovation layer for new financial services and products, right? But underlying that, the infrastructure, okay, from the clearing and settlement of the money, it used to be in the hands of Alipay, which again is not a comfortable situation, because Alipay can in theory go bankrupt, right, or have profit-driven motives that do not benefit society, right? Whereas if they replace that layer with ECNY, the clearing and settlement, controlled by the central bank, then you have a full ecosystem where you have the innovation, you have the privatization, but in a very centralized way. You also have the proper clearing and settlement, regulatory control, compliance, importantly, stack built in, so that you can have a more robust and ecosystem.
Okay. So thank you very much, Michael. Okay. So let me turn to Jason. Jason, okay, I understand your company develop solutions to help companies to address sustainability and ESG issues. So could you share with us the linkage between fintech and sustainability, and what is the market potential of applying fintech in achieving, say, the national goal of decarbonization?
Yeah, thanks, Dean Tam. First of all, let me just share that my company, Mealtech, is what I call a Fintech / SUSTech, which stands for Sustainability Tech Company. We're the largest in Asia. And our own company, if you look at our own company growth trajectory, it's a proof to the linkage between fintech and SUSTech and the development of the overall kind of a decarbonization national goal. We started off in 2016 just by serving financial institutions at that time, and we developed the largest kind of ESG, environmental, social, and governance database that covers Asia Pacific. That has been, we have our own ratings, and that has been very successful. But until I would say 2020 and early 2020, we started to get into the corporate world as well. After serving financial institutions, asset managers, asset owners, buy side, sell side, and commercial banks for many years. And this is because there's a huge demand if you compare to for example, 5 or 10 years ago, when the Paris Accord was rolled out, there was also a push for climate change, but that round was mainly regulatory kind of incentives. The whole economy wasn't properly kind of incentivized. But what we have seen for this round of decarbonization goal set by the national target is that the real economy is actually moving toward it. We saw the financial markets growing very large. That's not only with regard to the domestic China market, but more than half of our financial institutional clients are global asset managers, global asset owners, and global corporate banking or corporate banks. And besides that, we have also seen, for example, a strong push on the supply chain as well. So not only the financial institutions are trying to incentivize their portfolio companies to do more efforts, to put more efforts onto decarbonization, but also we've seen customers, for example, in Europe and North America are trying to insert more I would say pressure on their suppliers in the Asia Pacific region, especially in the Greater China and Southeast Asia, to implement either technology or at least reporting measures toward their sustainability kind of efforts. So I think overall speaking, the linkage between finance and sustainability is very strong. After China has set the 2030 and 2060 kind of a decarbonization goals, and this round of decarbonization, or this round of push for climate change, for ESG, environmental, social, and governance, for the overall sustainability goal is very different from 5 or 10 years ago about the Paris Accord. I think the finance industry right now is really driving a change on the real economy right now.
Thank you, Jason. I am reminded that the time for the first session is up. So we need to switch to the questions from the audience. Which actually I see quite a number of questions already put on the Slido. So maybe I just pick the first one and maybe invite Robin to address them. I think it's an interesting question. So it's a question about the Indian market. Well, India is another huge economy, and the question is having Chinese fintech company, I suppose, going to explore the Indian market. So is this a big market for Chinese fintech companies in India, Robin?
Yes. So this is a very interesting question, especially at this moment. If you look at the news that maybe 1 to 2 weeks back, Shopee, which is a giant of e-commerce in Singapore, they quit from the Indian market. So this is some signal that the political relationship between the two countries are still in a hard time. So I believe the Indian market is a huge market. It has a great potential. So that is why if you go back to 3 years back, at that moment, I remember that Xi Jinping visited India at year 2018, I remember. So at that moment, all Chinese fintech giants, they have direct subsidiaries in India and also have a lot of investment in Indian fintech companies. One typical case is Paytm, which owned a big portion of it owned by Alipay, right? But the situation changed very quickly after in the past 2 to 3 years, and due to the political issue between these two countries. I think everyone knows that the conflicts at the borders. So at this moment, I still cannot be optimistic about the fintech opportunity in Indian market. Actually, I had a team in year 2020 in India, and we set up a NBFC, non-banking financial institution there. But in the last year, we dismissed the team and we get our money back. We now change our focus to Southeast Asia because it is very, very unpredictable about the future of this we could say commercial environment of Indian market. I think it is a huge problem. Thank you.
Okay, thank you, Robin. Okay, Michael and Jason, any comments on this question?
Yeah, I would agree with Robin. Because of the geopolitical situation, I also believe that there's a lot of pushback for Chinese companies that want to go into the India ecosystem. Now, what's actually very interesting, though, is that there'll probably be a convergence on the digital currency or digital asset side. Right. So as India's Royal Bank of India starts to get its regulation in place, I think there'll be opportunities, from the efficiency standpoint, to connect these new digital rails to allow cross-border payments, to allow financing, and to eventually digitize its economy. And so I think there'll be interoperability plays. India has its India stack. Okay, they've actually surpassed China, in fact, on digital payment scale with this full stack government sort of led initiative to create its infrastructure, right? So I think they're doing quite well, despite the geopolitical tension. Ultimately, China and India also are very large trade partners, being some of the largest, most populous nations in the world. So I believe that when the time is right and the infrastructure is mature, I think in the end, efficiency and cost savings is going to win the day, right? Why people are not going to not work together. They might have disagreements on trade and things like this, but ultimately underlying that there'll be a lot of economic activity, and that will be moved to these new digital finance rails over the next half decade or so. So I believe that, in my opinion, actually, I believe that this is the great equalizer, and it's the thing that will move, I would say, the world to a more positive place. Right after World War I, the international ICC, International Chamber of Commerce, the largest trade organization in the world, was formed under the principle that if you enable trade more effectively, then you interconnect the world and you globalize, and people will have less interest in causing World War III, right? And so I believe that's the case also here, where the infrastructure technology, right? We have a lot of disruption, right, these days. I mean, we are moving toward a very difficult geopolitical situation with Ukraine and Russia. But because of the sanctions that have happened, I think a lot of the world is waking up to the fact that, okay, a unilateral move, to freeze central bank assets and things like that is systemic to the international monetary system. And so I believe there's going to be a shift, a more rapid shift, a catalyst to move to new rails where there's, I would say, more multipolar coordination and things like that. And overall, over time, that's going to connect the world bring massive financial inclusion to the people who don't even have banks, let's say, and ultimately increase trade so that there'll be more win-win scenarios for everyone. Yeah.
Okay, thank you. Okay, so Jason, okay, will you expand your company into India?
It's just a very quick comment. So first of all, we're no expert on India. The farthest that we go right now, we have companies from Bangladesh who are reporting on our ESG reporting software and reporting to some of the commercial banks in Southeast Asia. But just a quick comment, I have very many good friends, entrepreneur friends, who have in the past few years set up startups in India. It's a big market, but based on what I heard, again, this is not my personal experience, so I can only borrow some ideas from my very close friends. I have a friend who works for Tencent to invest in India, who quitted his job and joined local Sequoia. I have a friend who set up one of the largest e-commerce platforms in India. Right now, they have to completely shut down and then move to Middle East. I have a friend who actually is in the P2P lending business and who also shut down the business. And I have friends who are actually very large tech giants on the hardware side and who are also having problems there. Overall speaking, from what I heard, I think a regulatory stability and policy consistency is very important for not only Chinese, but we actually consider ourselves international, entrepreneurs. For international entrepreneurs to set up teams to invest in the region. Yeah.
Thank you. Okay, so let me move on to the second question on the list, and is a question about universal payment method. So the question is there a fintech solution for universal payment method, perhaps along the lines of crypto, that is going to be acceptable with various e-commerce platforms? So do you think there will be a universal payment method, like Visa and Master, in the old days, that's accepted by all platforms worldwide? Any thought?
I'll take a stab at that because I actually work in that space. Yeah, I think there is. I mean, the promise of digital finance and digital assets and blockchain is that now we can take value and we can digitize it, we can encapsulate it in a tokenized form, and now we can have fungibility across different systems. I think the key aspect to allow this universal payment concept is interoperability. Okay, right now, you have all sorts of different blockchain infrastructure trying to be the one chain that rules them all, right? You got Ethereum, but now you got Polygon, you got Stellar, you got Algorand, you got Avalanche, you got and on the private chain side, permission chain side, you got Corda and Hyperledger. All these systems don't talk to each other right now, right? They're trying to just have their own ecosystem. And so really, I think the next phase of development to allow interoperability and the standards that will, unify these things is a technical one. Okay, so right now it's just very technically challenging to take a digital asset on Hyperledger and transfer it to Ethereum, right? And so, if you look at, say, the application layer, now we're talking about digital currencies, right? If we have a stable coin on Ethereum, public chain, and then we have a CBDC from the Bank of England on something else, and they don't talk to each other, this is a major problem. So I think over the next say 3 or so years is going to be about interoperability. So how to connect these different blockchains and have fungibility across these networks. And then we can talk about the standards to do that. So actually, as an example, I have a company called Free Flow Finance, which is doing exactly this, right? If you are a payment rail in Africa and you want to work USDC, which is a stable coin, a regulated stable coin in the US, but then you want to transfer to another local currency in Nigeria, maybe the e-naira from Nigeria on another system, right? Then you have a problem because of technical interoperability. But we have a unified window, kind of like a universal wallet, okay, that will allow these different blockchain systems to clear and settle, and also compliance stack and everything like that. I think that's what's going to that is, I guess, a form of this universal payment interface concept that you're talking about. That's what's going to happen in the future. There'll be just interoperability, and anyone with any type of infrastructure can plug into that, and then there'll be a layer on top that will deal with FX and all the things on top. So I believe that the technology is there, or the roadmap to the technology is there, and that will result in massive adoption, right? Because really what the future world is a more decentralized world. It's not a unified network like, say, SWIFT is. It'll be a very decentralized ecosystem of stablecoins and CBDCs and regional reserve currencies and whatever, and they will just all start to be able to talk to each other and bring a lot of transferability across these networks. And that's going to bring what we call liquidity, right? In economics is a term, liquidity, which means that, if I have an asset and I want to find buyers for that asset, I can get access to it through this global network instead of all these little tiny siloed gardens, right? And overall, that's going to raise the tide for everyone. Yeah.
Thank you, Michael. Jason, Robin, any further views on a universal digital currency?
Robin.
Okay, actually, I think the ideas and thoughts of Michael is quite visionary, and I fully agree on that. But I think the biggest challenge is about the time to go. How long we need to, how long time we need to take to achieve that. The universal payment system based on the decentralized technologies. But I think it is not only about economic, it's not only about digital currency, it's more about political segments, So I think we still have a lot of challenge here. I do have a blockchain team working on blockchain technologies, but so far I don't see any realistic use cases for the mass of people. So far it is still at early stage. So yeah, this is my point. Thank you.
Thank you, Robin. Jason?
Yeah, I think first of all, I really agree with Michael's vision, and also I think interoperability is going to happen, and technology is going to be there, and it's already there. But my quick comment is that it also depends on market need. What I have seen, to make an analogy, for example, I've in the credit world, around 10 years ago, I've seen startups were trying to, for example, help Chinese people, help African people to get a good credit line in the US, for example. This is something, at that time, people or entrepreneurs have identified it as an opportunity, but eventually the market size isn't big enough for them to establish a large business. And many of them, have decided to pivot to some of the larger trends. So I think interoperability of overall the, universal payment system really depends on the, I would say, interdependency or connectivity of the global economy. And I don't think politics is eventually going to hinder this, but let's all have our fingers crossed that I hope a globalization will still happen. And I still want to live in a more globalized and interconnected world. And if that happens, I think there will be much stronger need for a universal payment system. Yes.
Thank you, Jason. So let me pick one final question from the audience. Let's see, this is about regulation. Maybe I reframe the questions a little bit. So it's the relationship between regulation and innovation. So on one hand, there's there's a saying that, okay, well, regulation, okay, will discourage innovation. But on the other hand, okay, as you guys comment, okay, on the Indian market, okay, if there's no regulation, okay, or okay, the regulation is not clear, okay, it will also discourage, okay, innovation. So how do you strike a balance, okay, between the two? Okay, on one hand, it's highly regulated, okay, which kind of discourage innovation. But on the other hand, okay, on the other extreme, okay, I mean, it's free for all, okay, to create a lot of uncertainty. So what's your take? Okay, what should be the right balance, okay, in the fintech space? Anyone? Jason, you start first, maybe.
Yeah, sure. Yeah, happy to comment on that a little bit. I think Dean Tam used a very good phrase. It's called a strike a balance. And I think when we talk about regulation, I think for the U.S. and China, first of all, the two set of regulators are all extremely smart people, and there's very little quote unquote real kind of political stuff. And then I think most of the regulations that have been rolled out in the US and China, there was a purpose. However, I want to remind everyone that regulation is not black or white. There's a spectrum, as Dean Tam correctly pointed out. And there's also the regulation part and also how it is implemented. So what we have seen, or what we have seen in China in the past, is that there's a good purpose, but whether it was implemented too fast or too slow, there's still a little bit of a debate. And similarly, in the U.S., it's on the other hand, it's really on the other end of the spectrum in terms of implementation, whether it was a little bit too slow, where we're talking about in China, whether it was a little bit too fast. Right. And also in terms of overall policy setting, I think China over the past 10 to 20 years have adopted the mentality that if there's a new trend, there's a new industry, then let it grow first, and the regulators will try to learn. And then at some point, they'll tap the water and then say, hey, you know what, let's stop doing this, or let's put more restrictions onto this, and let's regulate this. And I think overall speaking, this has also given entrepreneurs more flexibility at the very beginning to develop or to explore opportunities within an industry. At the same time, I think entrepreneurs need to stay vigilant to the overall overheating or the development of the economy, of the industry that we're talking about, and it's going to be regulated. And we should be crystal clear that if something goes wrong and if it's not on the right track to serve the general public, then there's a chance of being regulated, and we better prepare for that. So that's the mentality that we should adopt in China.
Yeah. Thank you, Jason. Okay. Well, since we are running out of time, maybe just a short comment from Robin and Michael on this.
Yeah, I'm a entrepreneurial professor, and I think in modern entrepreneurial theory, there's something called lean methodology. Okay, which is to say, you don't design a product and then go look for a market. It's all market driven from the start. You need to start with what we call MVP, like a half-formed but kind of conceptual thing that actually is business viable. And you go to the market and get feedback. And the feedback says, no, this is good, this is not good. The button needs to be larger, the color needs to be whatever. And then you have a feedback cycle that iteratively improves the product towards something that actually, we call it product market fit. It fits the market that you want to do. So I think that's what's happening in the fintech space. We have a lot of innovation, right? And it's not quite clear how these capabilities of innovation are going to address the market needs and the pain points, and also the regulatory environment, right? So there has to be some sort of flexible mechanism to get that product market fit and feedback. And that regulatory, as I mentioned before, that balance point, I think that is the key word. It can't be fully regulated, it can't be fully deregulated. Some sort of porridge is just right in the middle, where you have enough of a framework of the rules of engagement so people are well behaved, but it has enough flexibility that people can experiment and do the things that they want to do. So I think that's one point. And then the other point is on the point of crypto in general, right? When we talked about crypto, we went from a very centralized world to potentially a fully decentralized world. And a lot of the sort of Bitcoin maximalists, people who really like the future of decentralization, jumped on decentralization. But full decentralization is almost as bad as full centralization, right? If you have something that's fully centralized, you have too much control and not enough innovation room and things like that. You have full decentralization, it's like chaos, right? It's like Pirates Bay. Everybody can do whatever, but there's not enough rules of engagement. So in between, again, that sort of balance point, Eastern philosophy, it's basically you want to find that balance point where you have enough, I call it minimally viable structure in the rules, right? And in that, a lot of ability to move around. I think that's the best set of affairs.
Very good point, Michael. Okay, so I have only 2 minutes for this section, so we'll quickly move on to Robin. Okay, just a very quick comment. Okay.
I try to make it brief. I think the relationship between a business, between a team and the regulators, I think the relationship is quite close actually. What we do in China and in Southeast Asia and also in India, we proactively talk with regulators and try to understand their requirements, understand their thinking, and that is very important. That no matter which market you are, so the most important thing is about communication. That's my point. Thank you.
Thank you. Okay. Well, okay. Once again, okay. Thank you, Michael, Jason, and Robin. Okay. Thank you so much. Okay, for your sharing. I learned a lot. Okay. Myself. Okay. My key takeaway from this is actually everybody's learning. So, in the fintech space, we need to try new ideas. Not all of them work, but we need to continue to adopt this learning approach along the way. Same for the regulator, as Jason, Michael, and Robin, you just point out. So even the regulator themselves are learning along the way. So that is kind of my key takeaway. So. Thank you again, and also thank you for the audience, for attending this section. Understand, the time is up. So let me, pass the floor, to Professor Kramer.
Dean Tam, listen, a big thank you. I thoroughly enjoyed the session, and Michael, Jason, and Robin, excellent. And if you don't mind, I want to add my own takeaways because I'm learning so much on all of this. I think this whole discussion here about the role of government and getting the balance right. And I think Michael was talking about getting the infrastructure kind of set so you don't have risk there. And then you can have entrepreneurial innovation around that. I think this whole discussion about digital assets and creating this fluid market with digital assets is a very exciting idea. I think this idea about decentralization, this is what Jennifer Zhu Scott talked about on the first day about Web 3.0 and creating this kind of empowered environment. And then, I think what Jason and Robin were talking about, so much about context matters. We can kind of say, well, why don't we do this in India? Why don't we do this in the US, et cetera? There's some important differences there that are all good differences, but understanding that matters a lot. And I also wanted to say the last comment that I took away is about the end of the day, globalization can be a really big asset. We aren't in that mode right now in the world, certainly, but it is a very important reminder. I'm an economics major, and I always remember specialization of labor and all those good things. So I think you guys did a great job. So a big thank you to the four of you. Good learnings there. And also just want to thank our transportation breakout group because they did such a great job of talking about how the goals of climate change are heavily driven off of transportation decisions. And they talk so much about how in China, mobility's been core in terms of an investment focus. And similar to the Fintech panel we just had, talking about the differences between China and the US and how that speaks to different types of innovation occurring. So let me just say in closing here, reminder, we will have our final session on Friday evening, 5 p.m. Pacific time, 8 a.m. China Standard Time. That focus will be on a 360-degree view on the state of technology today and the rapidly changing public policy environment. 2 sessions that we're going to have. First one is a 360 view on technology with Ambassador David Gross, U.S. Ambassador, who will look across the world at what's happening. Second session is going to be on the Greater China region, its unique context, non-market risks, and rapidly changing public policy environment. And all of the implications for tech companies. And we're going to have Andy Rothman, who's with Matthews Asia, and Albert Wong, who's CEO of Hong Kong Science and Technology Park. So it should be outstanding. Let me just say again to the audience, a big thank you. Let me thank our speakers who created great content. For all of you in the US, have a great evening. For those of you in the Greater China region, have a wonderful day. Take care, and we'll see you on Friday, Saturday. Bye-bye.